Okay, welcome everyone. This is the stock market technical analysis. I'm going to get into some potential trade ideas. That's what this channel is all about, is pointing out trade ideas before they happen so that hopefully we can profit on those. So I will get into those, guys. If you're new, drop me a thumbs up. Check out my stock market technical analysis course. I put that course together a few years ago at the request of my subscribers. I don't give it away for free, but I priced it affordable. That's going to give you a skill set. It's going to give you teachings, things that took me years to learn. I put that all into a course. It's about 4 hours of different video trainings, and it really breaks each concept down into its own thing. So it can really help you understand what I'm talking about in these videos. If you haven't checked that out, I think that will benefit you. Check that out. Link in the description below. Also, I do have we do have a YouTube membership where we basically are throwing around trade ideas. I'm kind of giving a little bit more of my market insights on that membership. Join up if you're interested. It's $5 a month. All right, so $60 a year to get to get additional trade ideas. I think that's well worth it as well. You should see a join button next to the subscribe button if you're already a subscriber. And if not, look in the description below of the video, and there should also be a link to join up. So interested, and you're all welcome to join there. Triple Qs, guys. All right, so a couple things. We've been talking about this short setup and a potential nice move to the downside for a few days now. If you go back and look at, really, again, on this channel, I've been short basically in here. So yeah, we're underwater a little bit, but only about 3% or so. Again, we have to give our trade a little bit of wiggle room. We're not going to be right from day one. Right when you enter the trade, you're not going to be right. The only time you're typically right in the beginning is if you're buying late to the party at the end of a move and you're just catching that final momentum. Then you can be right oftentimes right when you enter the trade. But again, that's why a lot of those people that chase the momentum like that end up being the bag holders, because essentially they buy a position and they get instant positive reaffirmation that the trade is correct. And yet when you're buying at the point where a new trend is about to start, you don't often get that positive reinforcement right in the beginning, okay? Sometimes you have to go underwater a little bit, take on a little bit of losses. That's just the name of the game. But if I'm right, then we're right in the area where we should reverse and start to head down. First target is right down here, okay? And it's about 300, I'd say. By the time we get down there, probably be about 300. We could have a big, huge move down, but likely going to take a couple days at least, down to about 300. All right, and from where we're at right now, that's a drop of, it's about 9-10%. All right, so that's basically what we're going to say, because we're down 1% already today. So, all right, so that's what I got on that. If you look at the hourly chart, we can see we had kind of the most recent price action, this little bearish rising wedge that we created. And this morning we've broken down from that wedge. That's a sell signal basically on the hourly chart. Now I don't think we're going too far today. We might see some profit taking, but we'll just kind of chop sideways right in here. The Fed minutes are coming out tomorrow at 11 o'clock Pacific time, 2 o'clock Eastern. So likely the market's going to just do nothing today ahead of those minutes. And then we should have some movement after those minutes. Okay, but we did break down, so I think we have started the path to the downside, and likely we'll continue that path after the Fed minutes. The initial reaction when the Fed minutes come out, we have to kind of take those with a grain of salt, because you could see something where the minutes come out, it rallies up, hits this trend line, then reverses. There is possibility there, so you just got to give it a little bit of wiggle room. And if sometimes the best thing to do is just to not really pay attention to the market in the hour or so after the Fed minutes, and just let it kind of wash out and then get a read on it. All right, so that's what I got there. If you go to the futures, the NASDAQ futures, important to watch as well, because that's the futures will give you an idea of what's going to happen when the market closes. And there's the futures, same kind of bearish rising wedge pattern here. All right, we've had this marked out for a little while, and there's your sell signal on the futures. So again, I think we continue to trade lower, whether, after the minutes we spike up and then go. I don't exactly know how that's going to play out, but we're starting to see the breakdown. And again, I think this brings us lower. So again, the price target on triple Qs is right down here, 298, 300, depending on when we get there. Okay, and maybe we'll go lower from there. I'm not going to count on that for now. I'm just looking to trade this move down here, and then we'll cover and then reassess. But there is the possibility in my longer term target, which I do think we have a very good chance of getting down there. If I go to the weekly chart, you can see there's your pre-COVID highs right here, 237. This is where I think the market is heading, triple Qs is heading. So maybe we do it like this. We head down, hit this, bounce, hit that trend line again, then roll over in the future, run down and hit that target. And good buy zone right down there. So that's really where I'm interested in going long, probably for more sustainable rally that lasts maybe more than a couple weeks to a month, something that might last 6-9 months, maybe even a year. We'll see. All right, so that is the trading plan, bigger picture, and also the shorter picture on the triple Qs. All right, 298, 290, 300. The negative divergence remains and is confirming. All right, so that's the other thing you got to pay attention to. You see here on triple Qs, look, this most recent high over the last few days, look at that right there on the PPO. We are turning down. Let me zoom that in. We're turning down. We've got a bearish crossover. It's confirming that negative divergence still remains. So I feel pretty good that we are going to, see that move down to that 300 area on triple Qs. But no guarantees. We'll just adjust as we see the charts shape up. On the SPY, looking at the daily chart here, you can see we're just in a zone of major resistance. So 200-day moving average is right up here at 431.80. Potential big long-term downtrend line up here at 435-ish there. And you can just see that basically resistance, and I think this could be resistance. And then if I go down to the hourly chart, we have a bearish rising wedge, and we're kind of there at the top of the wedge. So kind of triple resistance just overhead. And it's just not as, it doesn't make sense to be long here in my perspective. That's basically it. Negative divergence remains. You can see on the PPO, let me zoom that in, starting to confirm with the bearish crossover. So we're keeping our negative divergence intact. And again, that tells me that all of this kind of floaty upward price action we've seen leading into the Fed is likely going to get faded pretty hard. I think there's a decent bull trap that's been set. And retail bulls are not going to get out. Okay, they don't get out. They get out when things come crashing down. So that's just what we have to see. And I think it's set up for that. Back to the daily, the target on this one is this potential uptrend line right here. It's kind of consistent with the triple Qs, and that would be, anywhere where this falls, maybe down here at 390, 396. I don't know when it would actually hit it. That's a move of about 8 to 9%. It's pretty consistent with the triple Qs. That's the short-term target over the next few weeks on SPY. And I do believe that will be hit as well. If you look at the weekly on SPY, just to give you guys longer term analysis, pre-COVID highs are right here, about 340-ish. All right, they're right there. So that is where I think we're heading. So maybe we do this, just an idea. I do believe we will be down here at this 340 zone on the next leg lower. And I do think we are set up for that. But maybe we go like this, run down, hit this trend line, get some sort of a bounce, maybe up to this, maybe run up and hit the 200 there in the future and then roll down and sell down, something like that. So for now, I'm just, we'll keep our targets tight and we'll just focus on that one right there. And then we'll wait and see how the charts look when we're down there. Okay, the IWM, it's just been on this kind of constant float up, and the trend line that I had got pretty sloppy. It was kind of chopped through, but we're right at the 200 day, and you can see over the last 3 days, it's not going anywhere until the Fed comes out. Let's just put it that way. It's just going to float around here. And if it goes anywhere, it's going to be down. It's not likely going to go much higher ahead of the Fed. All right, on the hourly. So if we go down to the hourly here, you can see negative divergence remains right there. All right, all this upward price action has been with divergent highs. So each new high has been a divergent high. If you don't understand these concepts, guys, take my course. Link in the description below. It's my stock market technical analysis course, and it will go into all these details to help you understand these concepts so that you have a good firm grasp on it, and you'll pick this stuff up quicker in my videos. Check that out. It's a good quality course. Now, so this one, it's just not my favorite in terms of it's just got kind of sloppy. I've been adjusting it, and so I'm just going to use the Qs mostly as my guide, but I do think we are going to continue to break down. Going down to where's the target? Could be down here, a potential all the way down here. That would be a drop of about 12%, 12.5%. And again, IWM moves usually more than triple Qs and the SPY. So we'll say that that's our target for now. And right now that's sitting at about 175-ish. We have the negative divergence. It's the same setup as the other large cap indices. Going to the weekly on IWM. Now, the one thing with IWM that's a little bit different than the other ones is your pre-COVID highs were right here at about 170. I've got it kind of marked out as big support. And sure enough, we already hit that right in here. So, this might be something where it just makes another leg down into that area of that big support while triple Qs and the SPY run down and hit those longer term targets on the weekly. That might be how that works out. We get down to this area down here, we're going to be pretty close to that big support. So IWM might just be a trade down there. We'll see. Just to follow up on this LLY trade, I still like it for downside. Now the bear flag's kind of been foiled, so we almost need to just get rid of that one. We had the potential bear flag, didn't work out. That's kind of how it goes sometimes. But we still have a sell signal. So at the end of the day, sell signal was right here. All right, that means that this thing has a high probability of going lower. Negative divergence on the daily chart, big negative divergence. This is a very large negative divergence on the daily, telling me that it's likely due for a much larger downward move. Okay, and so at the sell signal, it looks like we want a back test. Maybe after the Fed, we run up and hit a back test. Anything up, anything back testing the trend line is objective to add to the short. And again, first target really is down here at the 200-day moving average, which is likely going to fall about 284-ish. Okay, so that's our first target. From where we're at right now, that's a drop of about 9%. So that's the first move down. I believe we're going to head down to there, and then we'll evaluate. But again, the big negative divergence on the daily likely is signaling a larger move than just the 200. Okay, we might start a larger downtrend, but for now we'll just target that. Give you guys a quick update on Tesla. So I'm looking here on the hourly chart. Again, Tesla, this is the uptrend line here that we're walking up. All right, as we were moving higher, we were setting up with negative divergence there. All right, so nothing's changed on the divergences. Those continue to remain intact. And you can see recently, over the last few days, we broke that trend line, and it's just been a series of breakdowns and back tests. And so it's just, this is kind of pre-Fed price action. To me, it looks like topping action, sucking in some bulls, but you can see you break down, run up, back test 1, back test 2, back test 3. That should be all she wrote ahead of the Fed, but we'll see. And each one of those back tests, yesterday we popped up and made a slightly new high right here. And sure enough, it was a divergent high. All right, so again, as bullish as the chart seems, they can't burn through these divergences. The divergences remain intact, and that tells me that this bullish price action is actually, just the final move before the next trend reversal, which is to the downside. Okay, here's the PPO. You can see it's starting to point down, about to make a crossover. The RSI is kind of continued down. We have negative divergence on both of these, and we had made a slightly new high on pretty low volume this week, or this week and the end of last week. Okay, looks like momentum is dying out. We're about to head lower for the next move down. So again, I look to capture the big move. I want the big money. I want to capture this kind of stuff. I'm not interested in capturing this little final topping action. This is, to me, picking up nickels in front of the steamroller. I'm looking to catch the next big move. Now, I might be wrong, of course, so you always have to manage your position size, and I do teach that in my course as well. But the risk reward for the trade is not going long here. It's looking for the downside move. That's where the most reward is right now, especially with these divergences intact. Also, if you look at Tesla, let me just kind of clean this up real quick. You'll look at Tesla and you can see we also have divergence now on the daily chart. So there it is. See that? We made a slightly new high yesterday and negative divergence on the daily. So yeah, this one looks like it's going to head lower. I think we're above the 200. I think it's a fake out move and we're about to, make that next large move down. My target on this one, if we start to make the move down, is right down here at 550, 555-ish, right in here. Okay, the dollar. So the dollar plays into everything basically because stocks, commodities, it's all priced in the dollar. One thing about the dollar I want to point out, we have a negative divergence that's remained intact for a while. So, this is a divergent high. These are divergent highs. One thing we're holding this trend line right here. You can see we recently held it. I think what's in play is we're going to make one final divergent high in the dollar, run up, spike, make a new high in the dollar. And that will be consistent with the triple Qs running down and hitting some of those weekly targets. So maybe we run up, hit there, make a new divergent high, and the Q sells off over a period of time to hit those weekly targets, and then we break down. Okay, that's just kind of how this looks like it's set up. So I think the dollar is likely going to continue higher. How does that play into commodities? I'm not exactly sure. We can look at DBA. There is the potential for one more move down in the commodities. I have a target all the way down here at 1758. So there is the potential that we reject here and sell down. You can see, if I go to the hourly here on this DBA, you can see that we are set up with some negative divergence here, right here, just slightly. So I don't know. Maybe it's hard. I think commodities are in a longer term bull market. Maybe we have one more move down in the commodities before they resume that downtrend or that uptrend, the bull market they've started. So yeah, well, I don't know. I'm a little shaky on the commodities, at least in the short term. Okay, guys, so Fed minutes tomorrow. I don't know exactly what's expected. I think the market is expecting they're going to do a half a percent hike, but they might come out and do a 0.75. If they come out and do a 0.75, that's going to be pretty bearish. If they do a 0.5% hike, but then talk really bearish, maybe they'll, or really hawkish basically, then the market will likely sell down after that. Yeah, that's it. Like basically, if the Fed does not come out and signal that they're going to ease off and be data dependent, and they come out and signal that they're going to be hawkish, we should see that next leg lower. Who knows what's going to happen, but that's kind of the setup. So I'll get the video guys out. Drop me a thumbs up on your way out. Catch you on the next one. Bye.